pension funds and mutual funds and wealth funds and so on, is $131.77 trillion. And all of the money that was invested into the currency that was invested into gold in 2018 was 83.6 billion. And all gold that exists as far as investment gold that's available is about $1 trillion or so, right? And
that's correct.
Okay. So there's $1 trillion worth of gold out there at just 2% of their assets. When institutional money comes, you're talking about $2.64 trillion trying to land on a $1 trillion pile. And the only logical thing for them to be able to buy is new gold coming into the market. So the 2018 gold investment, the 83.6 billion, this is like fresh mine supply coming to market, or
that's right. That's exactly right. Or scrap metal that's been recycled. It's new supply, and that's where the figures vary, and it's hard to track down this data scientifically. But roughly 3 out of 4 ounces of investment gold that are bought each year comes from new mine supply solely. So it's what's dug up or recycled and put into coins and bars every year. That's where most investment metal comes from. So that's why I used the 2018 figure for the total amount of investment gold that was made last year. And it's just not going to work. As this table clearly shows, pension funds alone would buy more than every ounce of investment gold last year if they, as an industry, wanted just 2% of their assets into gold. And of course, they're only one institutional investor. There's hundreds and thousands of these kinds of agencies that could do this.
Back in the 70s, they didn't recommend putting gold in a portfolio until gold was like taking off like a rocket in 79. And then by the 1980s, they used to say put 15 or 20%, and then that was lowered to 10%. And a few years later, by the time we got around to the late 90s, they were saying 5% in your portfolio. And by the 2000s, nobody was recommending any gold when they should have been saying this is the time to go into gold.
Right.
What happens then if they go back to this 10% recommendation? That's 13.2 trillion roughly. And the entire gold market right now is $1 trillion. So you got 13 times the currency trying to land on that tiny pile of metal. I mean, we are in for some spectacular fireworks pretty soon, I believe. I think everybody needs to read Jeff's latest article. It's fantastic. We'll put a link below the video. And Jeff, anything else you want to say at the end here?
Well, some people will say in response to this, well, there's a lot of investment gold out there that could be bought, and that's true. This particular article really only looks at last year's demand because that's where most investment comes from. But the point of the metal that, let's say what you and I own, all the Eagles that you and I own, we're not going to be selling them. They're not going to be on the market. They're not going to be available. You and I aren't going to sell until the price is way, way out of whack, much, much higher and overvalued. That metal is really not available. Most of that metal, most people won't be selling in a bull market. They'll be buying. And so you combine that fact with just how much money could overwhelm the gold market, and it's really quite staggering. And it obviously is not going to work, and it's going to take much, much, much higher prices for this to have any semblance of working out for institutional advisors.
Yes. Okay. I want to thank you very much for joining me on this call. Our viewers out there, you should really go to goldsilver.com.